In the last video, we talked about GE Vernova and the AI power infrastructure trade, and that was outside the data center part of the story. Power generation, grid infrastructure, electrification. But once electricity reaches a data center, the problem is not over. The power still has to be controlled. It has to be protected. It has to be backed up, and maybe most importantly, it has to be cooled. That's where Vertiv comes in. Vertiv is one of those companies investors are watching because it sits inside the data center infrastructure chain. It's not just like this is not a buy recommendation, by the way. Uh, I'm gonna hopefully teach you in this video about what Vertiv is and how to understand it and what I'm doing. So the goal is to understand what it does, why AI data centers need this kind of infrastructure. Whether the business is actually proving a thesis, uh, and how I think about the trade or the stock without blindly chasing it. This is where because AI it doesn't need just chips, right? It needs power, and inside the data centers, that power management uh, needs cooling. It needs to be up all the time, and it needs reliability. Just a quick reminder before we begin, this video is for educational and informational purposes only. This is not financial advice. Anytime you're dealing with investing or options, make sure you do your own research and make your own decisions. So here's the first teaching point is the AI bottleneck can move. At first, investors focused on chips. Then we were looking at memories. That became a bottleneck. The data center capacity became a bottleneck. The power became a bottleneck. But once the power gets to the facility, there's a whole nother problem. The data center has to be able to handle it. The AI servers can't just use far more power than traditional servers. And when you pack more computing power into smaller spaces, you create a higher power density. Power density simply means that how much electric a load can in computing equipment is packed into a given space, like a server rack or a data center room. Higher power density creates more heat. More heat means you need better cooling because these systems are mission critical. Uptime is going to matter. Uptime means that the system stays online without interruption, obviously. And in a major data center, if a major data center goes down, uh, that doesn't just get annoying. That could be extremely expensive, right? So Vertiv's role is not cool gadget for data centers. The role is infrastructure that helps a data center stay powered, cooled, protected, and running. This is why this company belongs in my AI infrastructure conversation. All right, now let's define the company. So Vertiv sells what it calls critical digital infrastructure. So in plain English, that means products and services that help data centers and other mission critical facilities stay online. The company designs, manufactures, sells, they install, they maintain the services infrastructure technologies for critical facilities. So its product category includes things like critical power, thermal management, racks and enclosures, monitoring and services. Now that sounds complicated, so let's simplify it. Look, so power management is about controlling and distributing electric inside the facility. Thermal management is about removing heat and keeping equipment at safe operating temperatures. These things don't like heat. Electronics don't like heat. So that's where Vertiv comes in. So racks and integration are about the physical systems that hold uh, and organize the equipment. The services are about installation, maintenance, monitoring, and support. So this matters because AI data centers are not just buildings full of computers. These are complex power and cooling systems wrapped around computers. And Vertiv sells the infrastructure that helps those systems work. There are a few terms investors should know and understand when they're looking at Vertiv. UPS stands for the uninterruptible power supply. It's not a delivery service in this case. That is backup power that helps protect equipment if the grid power fails or fluctuates. So the a PDU is power distribution unit. That helps route electricity to the servers, racks, and the equipment inside the data center. There's the thermal management means the system used to remote or to remove heat from to keep the temperatures under control. Liquid cooling is cooling that uses liquid instead of just air to help handle high density AI servers. Uptime is the ability of the system to stay online without interruption. The more powerful the AI rack becomes, the more important these terms become because the AI story is not just about the processing power. It's also about keeping the processor's power alive. It also cool, protected, in operating at scale. That is the infrastructure layer Vertiv is selling into. All right, now here's where the story is going to start showing up in the numbers. So in Q4 2025, Vertiv reported organic orders growth of 252% year over year. It also reported a book-to-bill ratio about 2.9 times, which means orders are coming in at almost 3 times the level of sales billed during that period. So book-to-bill is a very useful term. A book-to-bill ratio above 1 means that the company is booking more orders than it is billing in sales. A very high book to bill can signal strong demand, but it also means the company has to execute and turn those orders into revenue, right? So Vertiv also reported Q4 2025 backlog of 15 billion, up 109% year over year. So the backlog, I don't mean to insult anybody's intelligence here, but I'm just trying to I want to give these terms in case somebody doesn't understand them. So the backlog really it means the work the company has lined up for the future, but has not fully delivered yet. That's important because a backlog can give investors like kind of visibility into the future demand. Okay, so then in Q1 of 2026, Vertiv reported net sales 2.65 billion, which is up 30% year over year, with organic sales up 23%. The company also said that adjusted diluted EPS increased 83% year over year, fully, which would basically raise their full year guidance as well. So the demand story isn't just the headline. It's showing up in the orders. It's showing up in backlogs, in sales growth. It raised its guidance, but there is here's the discipline part, right? Orders are not the finish line. Orders have to become revenue. Revenue has to become margins. Margins has to become cash flow. And cash flow has to justify the price investors are paying for the stock. So, yes, the business evidence is strong, but now the execution has to follow. All right, let's run through my 7 fundamental principles. If you listen to my videos, you guys know I have the 7 fundamental principles that I came up with by listening to my gurus and coming up with some of my own strategies with this. So this is not to be this isn't meant to be perfect science. It's a framework. right? So it helps me slow down and ask whether I'm looking at a real business, a momentum trade, or just a good story. So number one is growth. For Vertiv, I would say yes. Sales, orders, backlogs, and guidance have been moving in the right direction. Now, number two, one of my most important things, moat. Okay, you hear people talk about moat all the time, and for Vertiv, I would say yes, or at least strong. Vertiv sells mission critical infrastructure. Okay, has customer relationships, installed systems, technical knowledge, and service relationships that are not easily replaced overnight. That's your moat. So the management, I would say yes right now. Execution and guidance trends have been strong recently, but management still has to prove it. They have to scale through this demand wave. So number four, margins. I'm going to give this a maybe. The business is improving, but margins still need a continued execution. Um, my mixed strength, supply chain discipline. So, you know, maybe. Number five is cash flow. I'd say yeah, yes on this one. The business is producing cash and improving with scale, so we're good on that one. Number six is risk. I'm going to say maybe. Competition, capex cycles, supply chain, customer concentration, and valuation. These all matter. And so number seven is timing. I'm going to go with also maybe on this one, because the business looks strong, but stock already has elevated expectations. So my quick verdict is great business, strong demand, but the key questions are valuation and timing. This is the exact kind of company I want to study, but not blindly chase. Okay. So the bull case is pretty simple. If AI data centers are in a multi-year build-out cycle, they're going to need more power and cooling infrastructure, right? Not just more chips, not just more servers. The more infrastructure per rack. Okay, higher power density means more demand for power distribution. More heat means more demand for cooling. More complexity means more demand for monitoring, integrations, and services. So Vertiv sits close to the hyperscalers, the enterprise data centers, and the providers that need these systems. That creates powerful setup, right? So the company has strong orders, large backlogs, raised guidance. It has direct exposure to one of the most important parts of the AI build out. More AI, more power, more cooling, more Vertiv, right? So that's the bullish argument. A strong bull thesis still has to pass the discipline test because the great stories don't automatically mean great entries. All right, boo this. All right, here's my risk case. You guys know, everybody knows that I'm not going to just give you the sugar coated version of everything. Okay, so this is where I got to stay honest. The first risk is valuation. Vertiv has already had a huge move, and current market data shows that the stock trading, I think it's around 300 right now. This video is coming out on 7/7 of 26, so we're in the 300s, which is elevated earnings multiple. So that doesn't mean that the company's bad. It just means expectations are high. It's the second risk is the competition. Other companies are investing aggressively in data center power, cooling, and electrical infrastructure. There's a lot of companies that are kind of coming out that might have a better mousetrap even. And I don't even want to talk about XAI right now because SpaceX is thinking about putting these guys into space. Guess what you don't need more of in space? That's cooling, right? So these are some of the risks that I'm going to look for. CapEx is cyclical. Well, I think so, but I mean, I think we're in the early stages of it as well. So, the demand's going to depend on the hyperscalers, the cloud companies, the major companies that are continue to spend heavily on AI infrastructure. So, if that spending slows or drifts or gets delayed, sentiment can change really quick on this guy. So the fourth risk is execution. Now scaling fast is hard. Supply chain, project timing, product availability, margins, customers delivery, all of this matters, right? So here, the fifth risk is sentiment. If the AI trade cools off, high multiple infrastructure names can sell off, even if the long term business is still good. This is the important lesson. A great company can still be a bad investment at the wrong price. I talk about this all the time. So I don't want to ask only, is Vertiv a good company? I think it is. So I'm not worried about that part. But I also want to ask, what expectations are already built into the stock price? Where this is where the discipline really comes in. All right, now here's how I would think about this stock from a trade plan standpoint. This is not a recommendation, okay? You got to do your own homework, but this is my framework. So at the time of building this, Vertiv is trading around 304 with the stock moving between like 287 and 313 intraday. So for me, above 315, I'm not going to chase this strength. That doesn't mean the stock can't go higher. I'm just saying it means that I don't like the buying extended strength after this major run. So my research or starter zone would be around 295 to 305. This would be kind of my first tranche, if you will. If that stock stabilizes in a broader market, if the broader market cooperates, this is not a full size territory for me. This is my study territory. Okay, so the better pullback zone to me is like around 270 to 285. I see support down there at 270. This is where the risk reward really becomes more attractive for me, especially if the support holds and the business story remains intact. Now there's a deeper zone here that I would be, you know, I would be more than a full position. I'd probably be full position plus a bit more. Is if this pulls back into the 230s, and the longer term moving, there's a 200-day moving average around that area right now. So that 230s would be holy cow. You definitely want to enter into that. Hold on, I definitely want to enter into that. That would be something you'd have to discover for yourself, of course. But for me, the rules are simple. I'm not going to oversize positions. There's defined risk options only. Cash secured puts, maybe only at prices I would actually want to own the company. And the premium has to justify the risk. If you're going to be putting on cash secured puts, you're doing it on red days at levels that you feel are going to be support resistance or moving day, moving averages, whatever. Watch the business, not just the chart. So, in order to stay strong, backlogs converts, margins improve, and guidance holds up. The thesis stays interesting. If those things weaken, the chart alone isn't going to be enough for me. All right, so here's the practical income investing takeaway. Vertiv sits near the center of AI data center power and the cooling trade. AI racks need more power. More power creates more heat. More heat requires more cooling. The data centers need uptime, reliability. They need monitoring, services, and protection. This is why Vertiv is worth studying. The demand is real. It's showing up in orders, showing up in backlog, it's showing up in sales growth, it's showing up in raised guidance. But the lesson is not, go buy the AI infrastructure stock. The lesson is find the theme, verify the business, respect the risks, and execute with a plan. For me, Vertiv looks like a strong business with a powerful infrastructure tailwind, but the valuation and the timing is going to matter for me. Great businesses do not always mean great entry. If you found this helpful, please hit like, subscribe, drop a comment below. Everything helps get this video out to more and more people. What AI infrastructure stock should I break down next? Eaton, Quanta. I already did GE Vernova, Vistra. How about Constellation Energy or something else? This is practical income investing. On my radar, worth researching. This is not financial advice. We'll see you next time. Thanks for watching.